Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers held ES above the 73 quarter to 75 quarter zone and then pushed ES up to the 81.5 resistance. At this point, heading into the open, we know that the buy side has been dominant in the overnight session, but our short-term bias is going to be neutral because in order for the market to break out above 81.5 to 83.5, we do have to see underlying strength, strong upside momentum, and participation from the other markets. So 81.5 to 83.5 is resistance until broken, and we are very close to the short-term inflection point. Now, given that we've been in a uptrend over the last several days, and even on the bigger picture, the bias is bullish, we are going to continue to favor the long side. But if we're seeing very clear signs in real time showing a lot of weakness in the underlying internals or the Russell putting in a bigger failure, then it could open the door for a short setup on the day time frame as well. On the downside, the 73 quarter to 75 quarter zone is really going to be key. It marks the bottom of the recent 3-day balance. And as long as that area is holding, technically the market is still stuck in a range within an overall bullish context. But if we break 73 quarter, then at least on the smaller time frames, it can result in some selling and a push into the 68 quarter to 70 quarter support zone. And that would still be an area where buyers can step in, because we know that when there is a lot of underlying bullishness on the larger time frame, short-term breakdowns have a tendency to fail. So as long as we're not heading down on excess weakness where the AD line is hitting, minus 1500 to 2000, and we're seeing major downside momentum, the 68 quarter to 70 quarter zone still has potential to hold. Below that, we have Friday's low at 66.5, and then support at 63 quarter, and then 59 to 61 is a larger time frame area of support. And in the event that the market actually goes down there, that would be an automatic long on first test and also a range extreme, because we are running in a lighter volume and lower volatility environment. So the expectation is not for the market to go all the way down there, of course. Our default scenario still favors the upside, and as long as we are holding 73 quarter, 75 quarter, the buyers technically can maintain control. Now, if the market is going to put in a breakout to the upside, then ideally ES actually holds the 77 to 78 quarter pre-market support. Now, that is a more aggressive area of support. It marks the previous close. You also have the current short-term high volume node within the recent 3-day balance at 2177. It marks a small breakout from a overnight balance. So the idea is that if the market is truly bullish and we are going to indeed break out to the upside, then 77 to 78 quarter can actually hold. But like I said, in order for that breakout to take place, you do have to see the other markets participating. So far we've seen a lack of participation over the last several days from the Russell, and that's really held the S&P back. Or on days where Nasdaq is showing weakness, it's held the S&P back. But right now, all the markets are near their short-term balance area highs. So as long as we can get participation from Nasdaq and Russell, then S&P can put in a breakout to a new all-time high as well. So that's going to be the default scenario, but it is conditional. We do have to see that underlying momentum, strength on the advanced decline, and then specifically you want to see participation from the Russell, which has resistance at 1232.3 to 1234.3. So if it can break out above that area, then it would at least open the door for a breakout in the S&P as well. Now on the upside, beyond 83.5, we don't have any hard resistance. The market would be making fresh all-time highs, but we do know that we're running in a lower volume and lower volatility environment, and the ranges have been fairly limited to around 10 to 12 points over the last several days. So in the event that we do break out above 83.5, we can still stall at 87 to 89, and the maximum potential given the recent volatility is the 91.75 to 93.75 zone. So that area has potential to cap the upside, and it would mark a range extreme. And even a push into 91.75 to 93.75 is low probability, just given the recent volume and the range expectation. Now, if the volume starts to rise and we're seeing, above average volume, then you can adjust that estimate. But given the current environment, 87 to 89 would pretty much be a cap area, and anything beyond that, 91.75 to 93.75, is really low odds. And if the market gets there, then we would definitely be hitting a short-term range extreme. So those are really the main ideas heading into the open. That's really how the market is set up at the moment. We broke out to the upside on Friday and then pushed to fresh all-time highs. But right now we have been balancing within a range over the last 3 days. So we know that the bigger picture bias is bullish, but now short-term our bias has to be a bit more neutral because we have now established yet another trading range or balance area. And in order to break out or break down, we are going to have to see some pretty decent strength, or even on the downside, in order to break down, we're going to have to see some pretty decent downside momentum and broad market weakness. Otherwise, we can continue to balance within this range. So again, by default, because the bigger picture bias is bullish, we are going to give more edge to the buy side. But if we see clear-cut signs showing that sellers are really stepping in a bigger way, or if we're seeing some bigger momentum come into the downside, then we need to rely on that neutral bias. And as long as we're securing good enough trade location, we still need to be willing to even consider shorting the market. But our first focus is going to be on the long side, and then we're open to short, but we have to see something for that idea to take place. So off the open, let's keep an eye on 77, 78 quarter. Let's see if the market can hold above that. Also keep an eye on the other markets to see if those are maintaining their overnight strength. If that's the case, then we will look for long setups in anticipation of a upside breakout. Otherwise, we're stuck in a range. So those are the main thoughts. Let's see if the buy side can really maintain the short-term control, and we'll take it from there.